Got very quiet. Yeah. Thank you. This is the sexy, edgy panel in FinTech, so to speak, right?
It's a good thing about us.
Thank you very much. Thank you, everybody, for getting up, and for everyone for being here with us, and for the panelists, and for our hosts for having us here today. Our panel, as you can see on the kickoff, is about FinTech trends, partnership, and collaboration. Before I elaborate a little bit more on that, maybe we can have an introduction for everybody on the panel. Do you want to start your end, Bruce?
Sure. Good morning. Bruce Silcoff, CEO of Shyft.
Hi. Morning, everyone. I'm Gagan Jain. I work with Cognizant's blockchain and digital distributed ledger technologies group. Cognizant, for those who don't know, we are a large systems integrator consulting technology firm based out of New York.
Hi, everyone. Nikos Acuña, Chief Visionary at Sizmek. I used to run the Rocket Fuel Institute, which was an AI media lab, and now we're also innovating around blockchain.
Hey everyone, Gal Mordechai. I'm a product manager at Sweetbridge. We're providing our members to generate liquidity out of their assets, both organizations and individuals.
Wow. And as Brett said in the beginning, I'm the MD of Rainmaking Colab. Some of you might know Startup Bootcamp, which is our sister company globally. And one of the things that we're doing at Rainmaking is we launched a new program this year for scale-up fintechs to partner and collaborate in a meaningful commercial way with tier one organizations. So we've jettisoned innovation, theater, and tourism, and now we're looking for real meaning, which is difficult at the very early startup stage, but clearly a bit easier as you get into scale. So we're a themed program, and our current theme is AI, which is kind of appropriate. And one of the themes that we have had crossover in digital identity is the blockchain, and we'll come back to that in a little while, and the resistance that we had with some of our tier one partners to the blockchain, and I know you all have thoughts on that as well. Apart from the arrival of us in New York this week, there also was the arrival in our inboxes of the Treasury report on FinTech. Timely. We planned it. We definitely planned it. So, and there's a lot of information in there. I have read the whole report. Has anybody read the whole report? No one is as sad as
Only
me.
you. Only me. All 200 pages.
I'm in New York City, and I read the whole report in my bed last night. Yeah, that was my nighttime reading. Well, there were some things in the report. Obviously, it's around sandboxes and the fact that we should experiment. I am from New York, which I hope we can all still hear, but I spend most of my time in London, where we have only one regulator, the FCA, and we have one country full of a certain number of people that's probably a state size here. So we can experiment with things like the sandbox and regulation and be a bit more bold with it than we can here. But the report from the Treasury seems to lead us to think that sandboxes, multi-states, licensing, for example, and also new technologies are things that we should all be in the US looking at. One of the other things that comes out of the report is a mention of data breaches and remedies for data breaches, particularly in relation to consumers, but also that there should be something alongside the fact that there is new technology. There's a whole paragraph, which I can quote, on the new technologies that have come out that are faster and more efficient and ripe for fintechs to be partnering with our large corporates. So we're saying all the right things, yet we know, Facebook, with data breaches are still increasing at a crazy rapid rate and causing great difficulties. We don't have a standard digital identity system really anywhere that we can lay claim to. And the cost of compliance and the compliance mountain, the regulation mountain, continues to grow and is one of the largest costs for all large corporates and tier one organizations. So knowing that and knowing what the Treasury has put out, I would put to the whole panel, we'll go one by one if we can, do you think that this needs to continue, breaches, compliance costs, or do we already have the technological solution? And if we do, how have you all experienced that? I can leave now. Do you want to start, Bruce?
Certainly. People ask me where I'm from. I say airports. The reason why I answer airports is because every day I seem to be on a plane traveling somewhere in the world talking about data breaches. Gemalto put out a report in July, so very recently, saying that every day almost 7.2 million data records are compromised.
Wow.
That's crazy. By the time we leave this panel today, you're probably going to have about 250,000 data records compromised. If that doesn't scare anybody, it scares a lot of people, and that's why I'm traveling the world, and we're fixing this problem. The good thing is that there is a solution to it. Blockchain is enabling us to decentralize data, to share data more efficiently, more securely, and we're part of that initiative at Shyft. We're focusing on KYC, AML right now, but at the end of the day, it's any data record that can be shared more securely, more efficiently. And so we're going to help you guys sleep better at night by solving this problem.
Thank you, Bruce. Gal, you have a different emphasis, but a similar
Yeah,
intention.
we're kind of doing the same thing, just from a different direction. We're creating an ecosystem of KYC-approved members and organizations, and we're allowing users to interact within that ecosystem exactly in the same manner in order to avoid the expenses that you talked about. Actually, I wanted to refer also to the Sandboxes. So we're a company based all over the world. We focus on supply chain mainly, and as a result, we have entities all over the world. However, our headquarters is here in Phoenix, and there was just an announcement in Phoenix last week, I think, of creating a sandbox around FinTech within Phoenix. So because we are providing liquidity and loans and lending systems, that fits exactly to our model as well. So that's kind of a collaboration between the regulator and FinTech companies. And wait for big news from us around the Phoenix area, because I think that it's really exciting.
Is there anything you want to announce today? I mean, Stay tuned.
Yeah,
Okay.
yeah.
Again, do you want to?
Yeah, so as a company, we work with a lot of large clients, I think almost 80 of the Fortune 100 firms. And while I agree that data breaches and things, there need to be proper disclosure also on that. The fact is that from a regulatory perspective, moving to a new technology is not as simple as we really think it should be, right? Because when you're dealing with financial services infrastructure, you're actually dealing with a very, very critical part of the economy, obviously, right? And leaving that to technology, even blockchain. I work in blockchain and distributed ledgers, and leaving that to a technology which still, it still has to prove itself at scale. It still has to prove itself that it is capable of providing the kind of security that millions and billions of people around the world require, is still not a very easy job, right? From a regulatory perspective, I agree, Helene, your view. The regulatory environment in the US is pretty complex, not as straightforward or as straightforward as the UK and other countries is, but still that doesn't, that also hides the fact that what they're trying to regulate is a very complex set of a very complex industry. The data that you're dealing with is actual client financial services data. I would say at least as complex or as critical as the private data that Facebook and other breaches actually reveal. So it's not a very straightforward thing, and that's what we are working with the clients for, helping them figure out. So small POCs, prototypes, other things. Even sandboxes are good, well and good, but to make sure that what you're doing in a sandbox can scale up to the millions, and some cases billions of customers that you have across the globe is not an easy task. So it's a journey rather than something that can be easily solved.
I think in the UK this year, in the next batch that have gone into the sandbox, because they do it in batches of roughly 24 or 25, 4, I'm pretty sure, of the companies this time are blockchain based. So, and the regulator wants to learn with them as they go and be part of the process, so the regulations are embedded in the solutions before they're launched.
If you can just add, Helene, so I'm part of the blockchain and distributed ledger technologies group, like I said, and one of the responsibilities that I have is to work with FinTech partners across the globe. And what we have seen is that our FinTech partners who work with regulatory sandboxes, they do provide a lot of assurance to our large financial services clients, for example, that from a regulatory perspective, things are fine. And that is one of the biggest advantages that we see. But from a scale and actual implementing perspective, there still is a long way to go. So yeah, there is, I'm not trying to diss Sandboxes as
No,
not
no.
necessarily-
Although there was somebody in California, I can't remember her name. Didn't she say, she said that the sandbox makes her feel like she's seeing the vision of kids playing in the sandbox, and that puts her off, and she's someone important in the space. I'll dig a name out later. And I thought, that's not very helpful, is it? It is, I mean, it is meant to be a place to experiment. Nikos, your thought, we've been talking KYC, AML, the cost, the identity. What's your perspective? Because you've got another angle.
Yeah, definitely. We don't deal with a lot of AML, thank God, but we do deal with a lot of know your customer issues. We are no stranger to data breaching, identity management type of issues coming from the advertising technology side powered by AI. That's what Sizmek does. And several years ago, myself and my associate Xander Katsatos here in the front row, we launched a predictive banking solution that's now being deployed across 8 of the largest 12 banks in the world. And Sizmek is in an interesting position because we don't deal with customer data. We are the second/third party in which we are only dealing with modeled environments to better understand customer experiences. In the event that a large bank with Fair Lending Act regulation, all of the complex compliance issues that have now burdened our space, when they want to port over their first-party data, we use a token to anonymize that data so that we could now target more efficiently across both paid media on their site, absolutely anywhere to enhance that customer experience. So it's essentially a fintech solution, and I agree that we need to bring sexy back to fintech, and blockchain is probably going to do it. But to that degree, I love the sandbox environment. I love the fact that the US Treasury Department is speaking like an agile company, right? So they are saying all the right things, but I agree that implementation and deployment still has a way to go.
I just add something to that whole sandbox thing. People always ask me, when's the US going to adopt, all this blockchain innovation? When's Canada? When are the larger countries going to do it? And unfortunately, it's like trying to turn an ocean liner in a pond. So these sandboxes are necessary to have proof of concept, for them to see that these actually work before they're going to adopt it. So we were at the World Economic Forum in Davos talking with the OECD, with FATF, a lot of governments, a lot of big institutions, and they all want to solve the problems that the world's facing, whether it's identity, whether it's data breaches, the likes. But it's tough for the bigger countries to move, so they look to the smaller ones and their sandboxes to see proof of concept. So a great case example is what happened with us with Bermuda. We were there talking with the Premier of Bermuda, David Burt, who comes from a technology background, and he said to us, anybody that's really has an expertise in blockchain and wants to help us change the world, you get on a plane and you come to Bermuda from Davos. And we did that, and we went to Bermuda, and within 2 months, the Premier wrote legislation to create what we call a sandbox for the planet, essentially. And we're starting with EIDs that will be in market by the end of Q4 this year. And the rest of the world is now following. Since then, I've been to the UK, I've been to Manila, I've been to Uganda, Rwanda, Congo, Brazil. All the bigger players in this world are looking at the smaller, more agile countries as the sandbox to see this proof of concept actually work. So it is essential.
I think some of this, as I'm listening to you, obviously financial inclusion was not so interesting, not so exciting in 2014 when we were talking about other things and dealing with it. It kind of got backburnered a little bit, as did blockchain at that time. And I mean, in London particularly, the market matured very quickly, and I think we're seeing that now in the US as well. But the countries that you mentioned, also some of them, the financial inclusion was the button for getting identities that then moved on, and how to make payments. Most people have one of these, right? Somewhere in the world of a type. We were talking about this before, Nikos. Not everybody is connected well enough. I actually fell onto 3G this morning. I haven't seen 3G for a long time. We're installing 5G in the UK because people complain so much about it, right? I'll take 4 on any day. But we need to be connected to be able for me to throw a payment to you with one of these as well, right? We need to have my identity verified, whether that's for health reasons or that's financial reasons. And obviously, I think as a technology, and you might see it, Gal, in different ways, it's not just financial, although we're in the fintech environment, not just financial services that we can then spread this out over, right? So the emerging markets tend to, I think, take the lead from an inclusion point of view, but then you have other industries like shipping, right, or food, from farm to fork, where it's been employed, and in Canada now probably cannabis will be the next blockchain because you can source it and improve the whole supply chain as well. So I think, it's fascinating to hear that your air miles must be crazy, incredible as well, right? So, where you're seeing and what you're seeing is actually what I think would have been happening as well around the inclusion side. So I said early on that part of my role is to get scale-ups to work with tier one organizations, and that sometimes, particularly in the financial organizations, and particularly again when we were talking about digital identity and alternative finance, one of the first things that came out of people's mouths was no blockchain, no cloud. How do you deal with that when you're talking to either your clients or your suppliers or your potentials? And what have you done that's been successful? What's been challenging? What didn't work? What can we learn from that? Anybody want to start?
Right.
Yeah.
So from our point of view, the supply chain world is very complex, and there's a real pain point over there. The world has about $70 trillion in supply chain assets. Out of them, about only 75% are utilized in every single moment. So it means that 25% out of $70 trillion are not utilized, or underutilized, or locked. And as a result, it's a pain point both for large organizations, but also for farmers in emerging markets. And the way that we address this is that we're not telling the existing marketplace, we're going to eliminate you, we're going to remove all the existing stakeholders, and we'll start our own thing. We're actually plugging into existing infrastructure, existing systems, and collaborate together with them in order to establish this new ecosystem that is beneficial for everyone. And that's the approach that we went with. And that's why within one of our initiatives, which is the Sweetbridge Alliance, we have more than 30-something organizations already that are willing to collaborate together with us in order to create this new liquid supply chain, which is exactly this type of collaboration with both large and small organizations to drive all of this ecosystem forward. So I think it's the key here is to address a specific pain point and then collaborate with rather than trying to disrupt completely.
Interesting, because I have to hold my hand up as being responsible for hiring so many of the COBOL programmers that hit the States in the early 80s. I'm sorry. And filling rooms of AS400s with COBOL programmers as well. How do you manage this, or have you come across this, or have you any of you experienced with old technology? Can we plug in, or do we have to start and scrap again? I mean, you're saying no, but
yeah. So taking my chief evangelist hat off, putting a venture hat and market research hat on, I have been evaluating the interconnected mobility space for quite some time. And like we mentioned earlier, the next 5 years will completely disrupt the last 50 years from a logistical, supply chain, liquid management standpoint because of the Uberization of the entire universe in terms of first-day delivery services, which will turn into a $250 billion industry. The broader transportation industry is going to be a $1 trillion industry, 15% of the global GDP. So with that, as analog systems become overhauled, plus how you mentioned, I'm going to connect this to mobility, we mentioned that the iPhone has only been around since 2007. So with utilization, more data, so obviously the GAFAs of the world, they're going to continue to get better because more people are using them. So you're using models to essentially optimize against those kinds of experiences. Well, obviously, you need to be able to model those same identity tokens and match those to individuals. And with that, with this transformation, the old infrastructures are definitely going to get left behind, but we're seeing more of a long tail in terms of like a fragmentation in terms of the scale of adoption, like we had mentioned. But going back to the need, just out of sheer necessity, clone company computing companies that are providing smartphones at $10 price points in emerging countries, small villages in the savannas of Africa, that need to trade bales of hay for their own cryptocurrencies. Of course, Vitalik at Ethereum would say that, hey, no, this is going to be completely scalable and adaptable, and we're going to have 10 million transactions per second in 2020. Probably not. So I'm also very optimistic in terms of the scalability issues, but you need both. You need the regulators, you need big companies and small, but you can't centralize power, so it needs to be both diffused and centralized at the same time.
Bit of a challenge.
Yeah.
Okay.
So one of the things that I tell a lot of my clients is when we talk about blockchain, is that if you were designing a bank from scratch today, knowing what you know about the blockchain, about Bitcoin, about all of these technologies, there's no way that you would not use these principles to design a core banking system. But unfortunately, that's not the place where you are at least with established banks and large financial services providers, you're not there. You have, like you said, large systems which are running on COBOL and it's and JCLs and VSAMs and all those good things. And the thing is that they have been proven to work. So completely ripping and replacing them, those kind of use cases when anyone who comes and suggests that let's take this to a client, that's not something that we prefer to, because that's not what is going to happen. You can have a visionary, you can have a exponential vision, but to get there you have to start incrementally. So even, for example, in the supply chain world, when we talk about connecting like farmers who are trading bales of hay to a blockchain, that is a good exponential vision to have. But to get there, you have to have a roadmap which takes you in small incremental steps, right? Take the order book, for example, or digitize the contracts and leave the actual physical part, because as of now, really there isn't a way, a real proven trustless way of connecting a physical good to a digital asset. So you have to get there in small steps, and that's going to happen. Like Nico said, it's a long tail, and it's not going to. You're not going to get there tomorrow. It's going to take small incremental steps to get there.
Bruce.
If there wasn't a problem, if there weren't problems, we wouldn't need a fix or fixes. We're sitting here today. I'm working 8 days a week because we got a lot of problems. 2009, financial crisis in the US, and people getting tired of intervention, manipulation, started the whole crypto movement. If there weren't data breaches, we wouldn't be sitting here. If 1.1 billion people in this world had identities that they currently don't, we wouldn't be sitting here. So we got lots of problems to deal with. There are 3.5 billion people in this world that are under or unbanked. We got problems. So we need to fix them. We need to fix them in a manner that solves problems and that talks to the systems that we currently have. A lot of people refer to the term interoperability. That's huge in this industry. We have to be able to talk to systems across institutions and across geographic boundaries, and that's what we're doing. And I got to tell you, also went through .com, and as much as .com helped shape this world, blockchain will dwarf that, and it's everywhere. It's everywhere. It's in every field, whether product supply chain, healthcare, government. It's everywhere. It's wide sweeping, and I hope you hear the passion in me, guys, because it is exciting times. We are part of a movement that will change this world for a long time to come. So the fact that you're sitting here, the fact that we could share our passion with you, it's great.
I'm welling up back here, Bruce. That was on a serious note, as you were talking, I was thinking about the discussions that I had when I used to be head of programs at the trade body for the UK for FinTech in 2014, and people were talking about Bitcoin and blockchain as if it was something that was we did our 2020 predictions at the time, right? And would it actually come to the fore at that time, once we got past what was the low-hanging fruit of consumer lending and then platforms for which are not as low-hanging fruit here yet as they were in the UK, lending platforms with algorithms and things like that. Now we seem to have got here faster, but also we seem to have had permission blockchains make their way forward first. I sometimes wonder if we're going to have all these different permission blockchains and how will they communicate with each other. Do we have to go through a painful place first before we get to an easier way of using it, or can we leapfrog that?
The maturity model for getting to, so in my opinion, and not to get like too far reaching and out there, but all of intelligence and all of technology innovation is based on the premise of what I call the 3 I's. So evolution in interfaces, infrastructure, and what's the third one?
AI?
Come on. No. Interfaces, infrastructure, and information. So the degree to which you can structure information. So as we move toward virtualized environments, if you think about it, to simplify, is networked integrity, and the idea of network integrity is based on how can I represent real life in a simulated environment, and what is the degree to which I can trust that authenticity? How can I represent this model? And so AI, I think, is kind of like the hidden gem in all this, because it's gained the widest adoption. And again, sitting from the Sizmek side of the universe and not dealing with first-party data, all we had was just models. So we had people that like to buy all these types of products are also more likely to qualify for this loan, are also more likely to qualify for private banking, or who's more likely to sign up for a checking account. So probabilistic models associated with the determinism that you would get within a large environment like a Facebook, like we said, we need both large and small to be able to get there. I mean, you look at the U.S. Senate hearings with Mark Zuckerberg, and they were just deer in headlights. They didn't know the right questions to ask. So we need the interdependencies, the interoperability, but like you had mentioned, it needs to be modeled in a way in which we can get there. So I think the tying theme that's percolating across all of our panelists here is that the maturity model is again looking like the degree to which we can represent things that we can trust online in these simulated environments. And that long tail is eventually going to follow. Yeah, stuff's going to break, but I think we're all pretty positive and can agree that we're moving toward abundance here.
Okay, if you had you've obviously spoken to governments, Bruce, and I think that governments, we've tried having an identity in the UK that was one that you could port from your benefits and your driver's license and everything else, that you could move into banking, and people didn't want to go down that road. But each of the European Union states needs to put forward their national identity schemes pretty soon. Ironically, speaking as a German-Italian, Germany and Italy, and I don't know how Italy managed this, any of my brethren in the room, we got in there first with national identity schemes. Do you think that Sierra Leone had voting done on the blockchain, and I think they were the first as well? Is that maybe a way into people's psyches to say, this is okay if we're doing things that are heavily paperwork driven, we have to do them repeatedly, we need to do them because they're important in our lives? Is that maybe a way to get the people used to it?
So a couple of things I want to address there. I was on a 6-hour flight yesterday, and for 6 hours I was writing a rebuttal to some guy who wrote an article claiming that this is all Big Brother and a mess, and scared of these times. I was so angry to read something like that, because all of what we're doing is consent-based. Okay, you have to permission sharing your personal data. It's not about us exposing your personal data to the whole world. We're actually making it more secure. So I had to just get that consent and permission thing out of the way. Let's talk about Europe for a second. There's a huge problem right now with Syrian refugees. So we're working with the European Economic Commission, because over 10% of the people coming across the border from Syria are coming across with fake passports, fake IDs. That's a problem. And the other people that are coming across are selling their legitimate IDs because they need to pay for food and clothing to survive. So we have to take the old system, the antiquated analog, handwritten paper IDs, and digitalize them. Now, is it harder in Europe to do it than in Bermuda, where there are 60,000 people? Of course. I was just in the Philippines trying to do that, because they have a huge problem with voter fraud. So there is 106 million people. Obviously a bigger challenge to do that there, but it's needed, and the whole world has to go that way. You had that in the U.S. too. We're sitting here, a lot of questions about voter fraud in the last U.S. election. So we have to fix this system. We have to move from the old, antiquated analog to digital.
Can I ask everybody, I know we're coming to the end of our panel, and on this thought of we have to move from analog to digital, what is the one or maybe the two things that you would want to put out to the powers that be or to the tier ones, to the corporates? What's a thought that we can leave people with to say, in the next 2 or 3 years, please do this so that we can move forward with this?
Go ahead.
I'd say start small, but start. You're looking at a world which will be increasingly interconnected from a value transfer perspective. You can always, anyways, share information today, but you were soon looking at a world where value transfer would be as simple as information exchange. And for the tier one players out there, the message that we always take is that you cannot wait for that world to come to your door. You have to be ready to embrace it when it comes. So, and for that, you have to make sure that your internal processes, all the different silos that you have from a technology perspective, from a business perspective, are as broken down as possible, right? So when you're looking at a world in which you're doing, for example, counterparty collateral exchange on a blockchain-based network, you cannot have siloed infrastructure, siloed technologies inside your own systems where the outside world looks radically different. If you're sharing data with your counterparties, you first have to make sure that your internal organizations, departments, are able to share data and information with each other.
So an internal
Exactly.
is start on your own doorstep, basically.
Yeah, so you don't need to adopt a blockchain for internal use cases. That's not what I'm saying. Most of the times it doesn't actually make sense. But you have to make sure that information, or for example, a single view of a customer is available to all your businesses at the very least. You don't have to do it on blockchain, but at least all your departments should be ready to interact with each other the way you would have to interact with your competitors in a few years down the line.
Okay, so you want to break down the silos. Nikos?
Yeah, the same. I would reiterate trust is transparency, and also to value smaller players and independence, right? So let's not completely put our trust in the GAFAs of the world. And let's also trust open environments in which, let's agree with definitely permissioning, but there's also a lot of great innovation going on based on probabilistic models in which we can model identities without having to expose any first-party data, and that could also be very accurate at the same time and has a ton more scalability. And that's actually going to be more fruitful than just opting in and going within a locked environment. We're not yet at the place in which we can trust any secure environment, obviously, and so we're going to need both the big guys and the small guys in order to drive innovation forward.
Wonderful. I always forget about the modeling, really overlook it. Go.
Yeah, it's pretty much the same thing. I think that collaboration and adaptability is critical, both large and small. Just get into these ecosystems that are beneficial for all the stakeholders and find ways to make your reality better.
Bruce?
I'm going to say this is a movement. This is a movement for change for the better. And the crypto world will be fast to adapt or adopt any of our innovation. It's the traditional world, the banks of the world, the governments that have a choice to make. You either put your head in the sand and ignore all the change that's happening around you, and then when you decide to take your head out of the sand, you see the backside of all the companies that have progressed past you. For those that embrace blockchain and the benefits that come with it, they will prosper. And that's what we're doing. We're around here spreading the gospel, sharing all the insight into the good that blockchain has to offer, and we want others to drink the Kool-Aid and be part of it.
Well,
Amen.
got the Kool-Aid in the back of the room. 2 questions. Yeah.
So, a lot of really real problems, from data breaches to voter fraud to bank, all of which come back to, at least in part, identity. And there's a lot of projects working. Security makes something, there's going to be some hacks. So how is Shyft dealing with
Well, our reason for being, why we're here, is because we're solving that problem right now. Yeah, there's going to continually be those that try and breach and try and steal things in life. We have to stay ahead of the curve. We know, for example, quantum computing is coming in about 2 years. So we are using machine learning and artificial intelligence to change the way we're holding data. We're going to be striping data. And that's a way to add additional security to be able to deal with threats that will come out of illicit behaviors leveraging quantum computing. So people always say, you don't want to try and compete with what Microsoft is doing today. You want to try and compete with what they're going to be doing in 5 years from now. So you have to have forward thinking and be ahead of the curve. And that's what we're all innovators here. We're all incubating new solutions that will solve not only today's problems, but the future problems that we see happening. Does that answer your question? Yeah.
You guys talked a lot about digital identity on a national level, right? So, identity card. Now, India is putting together their, I think it's called identity across the board for everybody. You have China, where they've kind of used this So, I guess for all of you, what's to stop every other government from, once they have this information, maybe a threat outside accessing that, but even a threat from inside using that for nefarious purposes?
Jump in.
I think if I can just take the example of Aadhaar and a few others. So the idea of having a national identity, which with your consent, you can, opt into banking services or financial insurance or any other kind of service is a great idea. But the actual implementations from a technology perspective are still not available at scale. If you look at Aadhaar or if you look at China's system, for example, they are susceptible to the kind of breaches that you spoke about. Not just insider breaches, but even from outside perspective, because they don't actually leverage the kind of technologies that we're talking about. They don't, for example, use DIDs on a blockchain where your data is actually not stored on the blockchain, but it's outside, and you're just putting the identifier, anchoring it to the blockchain. So all of these, from a technology perspective, are still missing, and that's what is actually needed to prevent the kind of problems that you're talking about. And that, unfortunately, we haven't seen a lot of examples. A few small countries, Estonia, like you said, Bermuda, I think, and a few others are trying that out. But in terms of large-scale implementations, that is still missing.
Got a few questions. Which way do you want to go? You're good. Can you just let us know where you're from as well and who you are? Your name and where you're from? Kevin. I love that. I love that. I asked for that. I walked right into that. What do you do when you're in Florida? Shoot for space. Space. You want a microphone? Do you have a microphone? You're not loud like me, Kevin.
Okay, my question is to all panel members. There are a lot of legacy systems in financial institutions, right? We have a lot of, IAS 400 databases. We have a lot of COBOL programmers to make all the system work. As we move from that old system to new, blockchain-based systems, we should find out a good way to utilize the old data in old systems, right? So what would be your strategies to utilize the old or existing legacy systems for the blockchain-based technology systems?
Good question.
People, process, technology roadmaps. We work with a lot of consultancies and agencies on implementing this for the large-scale brands. For agencies, it's the top 100 advertisers. For the consultancies, it's the Fortune 500 companies that are dealing with all of these same issues. And obviously, you need a short-term impact versus a long-term roadmap in order to transform all of the legacy data that you have in those systems. A lot of it is still manual, unfortunately, and I think there are certain innovations that are now going to start emerging from the fringe that will evolve. So within 5 years, I think that AI will now start structuring its own information, in which it won't just you won't have to use TensorFlow or like a mechanical Turk to verify some of that data with manual intervention. NLP now, if you recognize voice, it's at a 90% accuracy rate. So your Siri, your Amazon Echo is to the degree of 90% accuracy. So in 5 years, AI is going to be able to structure its own language. So there will be a time in which the data that you feed into these large obfuscated systems will now start to get structured automatically. So that's 5 years down the line. So the hard work that still needs to be done is still the hard process of digital transformation. Like we mentioned earlier, it's centralized point of view, a stack in which you could get that unified view of the customer, tied into your BI tools, tied into your financial management systems, tied into your HR systems, but everybody has the same problem. I guarantee you Google and Facebook have the same problem, is tying all of their data together. So it's a long haul, but it's balancing the first, second, and third stage between short-term impact and long-term innovation.
Hi, I'm Alex Robnett. I'm from Connecticut. But I also work for Nassau Re Asset Management Company. I had a question. Your comment about 3G it just stuck out to me, and I'm just wondering, you know, even with like the 5G networks that are being built out in the UK, with developing economies, are you seeing any kind of opportunities for joint ventures, maybe on the private side, as we figure out these software solutions, right, that are going to revolutionize our digital world? Are there opportunities for joint ventures to really kickstart that investment for 5G in these areas? Because we all know that the front-end cost is huge. So I'm just wondering if you could just briefly touch on that.
I'm sure that there are, because the connectivity bit is great, that we all, as I said, want to make payments, people-to-people payments and other things. We want to cut out the middleman, but we all need to be connected for that. And it's, as you point out, in developing countries, it's not, the connectivity is difficult. Having the phones, even if they're the clones, or you know, or if you're from the Omidyar or from the Gates Foundation, you can give out the phones if you're going to do a financial product, and maybe they are part of helping to build out the networks as well. I'm sure we'll see some investment from China, for example, because they are doing other ways of investing in terms of infrastructure and other ways. But I'm sure that there's a public-private opportunity there for that, because it's the thing that we need as we move forward. I said we got very complacent in the UK. We complain when we drop down a G when we leave a train station. And because our transport network is struggling, we need for more people to be able to work from home. Quite literally, it's a practical problem. And we're so tech-driven, especially around London, that it's just not fast enough to do what we need for it to do. So I'm sure that there are.
Okay, well, let's give a big round of applause for our panel.